Hello, Mark Sturdy here with highlights of 7 Days Ahead's multi-asset technical strategies, week of the 14th of December. And a quick look at our summary shows that we have one outstanding strong view. That is to say, we're bearish of the euro in all time frames, long, medium and short term. And a quick look at last week will show the changes. Last week we were bearish of the sterling as much as we were the euro, and we were bearish of oil. So we'll concentrate on why those are no longer our star suggestions. We only remain bearish of the euro. Let's go back to this week's thing. If we look at the dollar sterling, we certainly have a top here. So the trend is bearish in the long and medium term insofar as we've failed to get up through 143.76. We have failed to break this whole band of resistance in this bounce up here, and we've come off it. We've broken this support that might have been there from these prior highs here, and we've broken the support there, from the high at 134.82. But short term, the market is not showing clear. There is a bear trend certainly for sterling, but it's not as bearish as it might be, and it could well rally. So we're not out and out bearish right now. However, with the euro, we do remain out and out bearish. There's the same failure. Here's the driving force, the catalyst for further selling through the high here, the support here, this double-headed head and shoulders. And we think that's going down to 109. And we have the completion of a possible triangle, which has completed today. Going on to the oil, we were bearish of oil last week, and we're no longer that bearish. The failure to break up through this prior high and through sustain a break up through the band of resistance 75 to 77. Here's the clear failure. Not quite a monthly key reversal, but almost. Set the bears. We're exciting for the bears. Here's the breakdown of the medium-term bull head and shoulders. But until the market can break this diagonal, we're remaining a bit agnostic, and indeed the market's bounced above this supposed breakdown level, which it shouldn't have done if it was that bearish. So we've abandoned the bearish thing. Here's the detail of that rally. If it was that bearish, it wouldn't have bounced up through the broken support. So we've pulled back from our bearishness of oil. I think there's one more thing that we might like to highlight now. We aren't very strong on many positions, but we are interested in the S&P 500. It is, of course, in a massive uptrend, long term. But there's growing evidence. Here is a weekly key reversal that the market may be struggling, and it's worth keeping an eye on it. For the moment, even despite this weekly key reversal, the market bounced off this prior high. You see there, and bounced right up to the all-time high of 47.11. We had a sort of day key reversal here. We had another key reversal there, and the market has drifted back beneath and closed beneath 49.11. That seems to me to be a interesting triple failure at 47.11, which should be closely watched. That's it for this week. Not a great deal to report.